Hey togglers, this video is an in-depth follow-up to our previous What is a Toggle Insight video, so make sure to watch it if you haven't already. As you already know by now, Toggle analyzes millions of data points and time series every day to generate thousands of insights daily. To start, let's dive into one of our most frequently asked questions. What is the difference between a toggle insight and a trading signal, and why aren't they the same thing? A trading signal is a recommendation to act on a position that has, or at least should have, taken into account all factors driving price action, including any live news or mitigating circumstances that come up. In other words, a trading signal is expected to be blindly trusted. Whenever Toggle detects an anomaly in the fundamental, macro, or technical analysis of an asset, it backtests the identified relationship and assesses whether it is significant enough to report or not. If the tests prove to be significant, an insight is generated. The important thing to remember is that these insights are based on an asset's historical data and do not take into account externalities which would not have been previously observed. Take the Russian invasion of Ukraine coupled with the state of the global economy. Since the exact same event and its impact on the market hasn't been observed before, a lot of insights failed. In this case, if you had used Toggle's research as a signal, you would have probably lost money. However, using Toggle's research as insight would have helped you understand how assets have subsequently performed after similar macro events which sent markets crashing. It would then be up to you to supplement the insights with your own research to find the best entry point. Essentially, insights should be used as one of the many pieces in your investment puzzle. To put this into perspective, let's take an example. We have two things to do. One, go through the insight details, which we will do now, and second, do supplemental research on the asset you're looking at to determine whether the insight is indeed the primary factor driving price action. The first things to observe when opening an insight is 1. What is the insight being driven by? 2. How many times has this been observed in the past? And 3. How did the asset subsequently react in the past? In this case, this NVIDIA insight is driven by positive seasonality and based on the 23 times in the past when this happened. The asset subsequently rose 7.74% over the following 1 month. To dig deeper into the episodes, you can look at the Why It Might Move section, which highlights the indicator and the exact episode dates. Toggle observed NVIDIA stock in the first week of August for the past 23 years, starting in 1999. Pro users can take this investigation even further by opening the Insight and Scenario, which shows historical daily returns and individual episode returns. Okay, now let's check out the Insight Quality Checklist. All insights are backtested against these 8 conditions, and at least 5 need to be met in order for the research to be published as an insight. This insight received 7 out of 8 stars, showing us how robust the system found the relationship between NVIDIA's seasonality and the subsequent rise in the asset's price. The insight didn't receive the last star because this condition has not been observed in both an expansionary and recessionary period in the US economy, meaning it has only occurred in a bullish market environment, not a bearish one. This doesn't mean that it will definitely not happen again, but it has not historically been observed in a bear market. Given that we are technically in a recession and the market is likely to follow suit, we cannot blindly follow this insight like a signal. This is especially because this condition was not observed in a recessionary period, and given the current market environment, it's doubtful that it will happen again. That's the checklist for going through the insight. But what about external factors? Looking at other drivers like earnings and expectations for NVIDIA's earnings growth are low, we cannot invest based on this insight despite it having 7 stars. This is primarily because the result of an earnings call is a catalyst for the asset in either direction and would outweigh historical data. And luckily, we didn't blindly follow the insight like a signal. Here's another reason why you shouldn't use toggle insights like signals. A bullish and bearish insight generated on the same day for General Electric. What should you do? One is driven by risk off watch, and the other is based on the security being oversold. In such a scenario, it's important to remember that insights are mutually exclusive, meaning they are not dependent on each other. This means you need to evaluate each insight individually and take a call on which insight matters more. This can be done by comparing the star rating, number of similar episodes, hit rate, etc. However, as mentioned above, supplementing this information with real-time data should help you make an informed decision. With the economy expecting further rate hikes and inflation still at a 40-year high, maybe General Electric stock is not going to rebound like history. As a result, you would have probably gone with the risk off watch insight as investors have been shedding risky assets to hedge their portfolios against downside. So, to recap, a trading signal should take into account all information and provide you with an action. However, toggle insights just show you how the asset has historically reacted. It's up to you to supplement these insights with your own information, what's happening in the broad market, what are analysts saying, and so on, in order to make this the right decision. We hope you will use Toggle as one of the many pieces in your investment puzzle. To learn more about Toggle, check out our main website, toggle.ai.